All right, well, let's just move on to mine then. I'm actually going to make a little bit of a dicier pick this month. What I've displayed for you on the screen, much like Cy loves to do, I also like to tell you where some of my ideas come from. And this is actually the deep value screen, slightly modified, but certainly inspired by our efforts at the Challenge Club, and we've written it up in a couple of different places. Let me explain what the screen is first of all. Basically going out into the extended value line universe, which is about, I believe, 7,600 companies in the value line universe beyond the standard edition. And I'm looking for companies that have a financial strength of at least B++. So at least B++. Okay. Let's see if I can get my Madden thing working here. I'm being kind of stubborn. B++. So you can see all those companies are B++ or above. And then we also want companies, you know, in tough times, if you've got a company that's really in kind of garage sale mode, you want low relative long-term debt to capital. And so we basically set, we want to stay under 20%. And that's kind of a little bit of an arbitrary number, but less than 20% long-term debt to capital. And you can see that many of the companies actually have no long-term debt. And then they're simply ranked from in descending order by what are the highest projected long-term annual total return forecasts according to Value Line. Now I scratched a couple of these out. Strayer's already in the portfolio, and let's just set that one aside. And since we already have Strayer, we probably don't want DeVry. Much like Size comments on Aeropostale, I get kind of queasy when we're talking about those companies, but I should make the point that Aeropostale was recently featured as a 5-star stock by Morningstar. I believe it was actually featured as a purchase recommendation by the Motley Fools recently, so Aeropostale, you know, is kind of interesting. So we'll set this one aside. Research in Motion, again, high returns, no debt, a high financial strength rating, so that one survived. I've got a red line through First Solar, not because I don't like the company. I actually briefly scanned a report written by a guy by the name of Jim Chanos. Jim Chanos is actually one of the most highly regarded short-selling hedge fund managers out there. And when he bets against a company, and he's actually taken a very sizable stake and bet against the company by selling it short, he's a pretty thoughtful guy, and he doesn't make mistakes very often. So I just kind of would step back from that one and take a much closer look. He certainly does not agree with Value Line's assessment that this is a 30% return candidate. And I just would encourage everybody to look him up. The way you spell his name is Chanos. If you Google him and Google him with First Solar, you probably are going to get access to the report he just made at there's a conference going on right now where he actually did that analysis. KKR is kind of interesting, so there's a Blackstone group down here, left them on there, but you kind of get the idea. I was left with Research in Motion. This is a company that I've been nudged into studying by some people. It's one that I haven't paid too much attention to in the past. I really like the notion that they're in a very powerful zone of opportunity, you know, just wireless communications in general. This is the company that makes Blackberries. And in fact, I'll disclose a little bit more. My wife actually works for Chrysler Fiat, and she works in the division of the company that does all the stuff with the dashboards and the you know, user interface stuff in the basically the cockpit of your Chrysler cars. And they actually do have some one-on-one contact with the individuals at Research in Motion as they try to build out and develop those products for Chrysler. So some of the executives at Chrysler actually have some background also at Motorola. They have a fairly high opinion of Research in Motion and their innovative capabilities, and that kind of weighs on me as I look at them as a potential stock to consider. Let's take a little bit closer look at the company. There's an excerpt from Value Line. You can see that the current PE is feeling some of that pressure. This is a company that has a PE less than 10 right now. The low total return forecast, that's the one that we pay the most attention to in our following of companies, is you know, not bad. Not quite the elevated levels of some of the other companies, but it's in double digits at least. And a quick look at the visual analysis. The company is under considerable pressure from companies like Apple and Motorola. Apple's entree into the iPad environment and Motorola's Android phones are really a serious competitive threat for this company. The one area that's being a little bit less impacted is their presence in the corporate, and they basically refer to them as email-based phones. Again, the BlackBerries. Many corporations have very tight networks built around, BlackBerry technology, and that is a significant strength, very high market share for the company, and fairly loyal customers. But again, that's also a competitive environment. Ken was actually describing that one of his family members actually works for a company that drifted away from the BlackBerries and Research in Motion fairly recently. One of the other points I wanted to make before moving on here, if you do a traditional stock selection guide on the company and you ignore the forecasts for 2010, 2011, and 2012, if you were to leave those out and disregard them, you could very easily draw the trend line, very much in this fashion that you see here. And that's just probably not a very accurate representation of the opportunity environment for this company. If you take a look at the forecast period, in fact, those are the only 2 years that I left in, there are many analysts out there that have trouble seeing this company growing based on the competitive pressures at much more than high single digits. So we definitely wanted to condition our forecast down as we take a look at the company. That competitive pressure that I mentioned from the likes of Apple and others is weighing on margins also. Their corporate business that they kind of have a lock on is lower margin stuff. They would love to get back into the higher margin consumer stuff, but that's going to be a bloodbath. This is what Cy was mentioning about relative strength index. This is one of the other things that kind of pushed me over the edge on the company. The relative strength index is that chart you see up at the top. And anytime a company is down in that range of 30, particularly below 30, just as you see right over here on the right, that's a situation where it can be potentially oversold or attractively priced. And you can see that the stock price is down at multi-year lows, and could actually make a case for some support down in the low 40s. So those both are, again, kind of a look at how the professional investing world is treating this company, and there's a possibility that the company could rebound from those relatively low levels of late. Here's a quick look at our equity analysis guide. Again, we're talking about a relatively large company, 20 billion in sales, growing at approximately 12% based on our analysis going forward. That's what you see here, with historically consistent profit margins somewhere in this range. You can see that this PE ratio right now is probably hammered pretty well. It's down pretty low, and it would be reasonable to expect something in the low teens for a company like this. It does not pay a dividend. It's clearly a company facing a lot of challenges. Could be a falling knife. Be careful out there. Morningstar has a fair value of the company fairly close to the current price that you see here, so they see it as a hold. Standard & Poor's is apparently afraid to even give it a fair value rating, but it does have a buy rating on the company at 4 stars. So I'm going to roll the dice a little bit and go with BlackBerries and Research in Motion for my selection for this month.